right, so hello again, and thanks for joining us for another edition of MITV. I'm Fergal McAlinden, and today we'll be taking a look at two lending segments no mortgage broker can afford to overlook. We'll be delving into the later life and buy-to-let sectors, speaking with top executives about some of the main opportunities and challenges in those spaces and their main tips for brokers' success. So joining us today, I'm very pleased to welcome from Family Building Society, Head of Intermediary Sales, Darren Deacon. From the Mortgage Advice Bureau, we have Regional Sales Director for Later Life, Sanjay Gadia. Louise Stevens is Senior Advisor at Corco Lifetime. And Michael Craig is Managing Director at Brilliant Solutions. All right, so thank you all for joining us today, and we're going to get straight into it. Louise, maybe we'll start with you. Could you tell us about some of the main trends in later life lending that you've seen this year and what the market has looked like in 2025?
Yeah, sure. So particularly in quarter one, the market was up 33.5% for over 55s, getting new mortgages. So a little bit slower in quarter two, but it's, certainly rising, a rising market. More people are living, and needing mortgages older. So it's, really positive.
Great stuff, Darren. How about for you? Any kind of main trends that you've been noticing in the sector this year? And what's your thoughts on how the market's been?
Yeah, like Louise said, I think it's sort of slow and steady wins the race as far as the market's concerned. I mean, the later life market obviously is linked to the market in general. So a lot of the commentators I've been seeing throughout the year have been saying cautiously optimistic. And I think really that's how the later life sector has followed suit. So yes, it is moving in the right direction. But above all, what I've noticed in my role as head of sales is speaking with the clubs and networks. There is more and more emphasis placed on the later life market now, which is good to see. Sanjay, obviously at MAB there, one of the sort of leading lights as far as later life is concerned. And there's a big market to tap into there. So it's great to see there's a lot of focus that's being given to it. And also, I think really that sort of supports that is the FCA paper, the consultation paper that was brought out a few months ago, where later life played a very, very central part to that consultation. So that was good to see. It's good to see that we're looking to take later life lending out of being a niche or a specialism and bringing it into the mainstream. So I think for 2026 and beyond, the market looks at a more positive state.
Okay, well, that's definitely good to hear. Sanjay, cautious optimism is how Darren described it. Would you mirror those sentiments?
Yeah, I would do, Fergal. So if I look at the later life proposition, typically people, when they think later life, they immediately sort of tunnel into equity release or lifetime mortgages, but it's not the case. And, the sort of customers we're seeing today, where probably if you took the clock back a couple of years, you'd argue that a lifetime mortgage or an equity release plan is the right solution for them. But with the innovation that's coming out there from the likes of Family Building Society, there is a plethora of solutions out there for customers, arguably still working, but not yet hit sort of state pension age, but need a solution to help them through later life and support them in their later years. But it's the pricing mechanism on some of the solutions out there that's kind of probably put a bit of a back step in how this market can go. But as Darren said, I took great pleasure in seeing that later life was quite a big part of the FCA discussion paper, and the submissions were put in back quite recently. So yeah, we're absolutely aware that demographics, we're all living older, and to a degree, as an island, which we are, we have trillions of pounds of property estate sat in customers in that over 50s bracket. I think we are now seeing the more macro factors, government, FCA, etc., understanding that in order to support customers in later life, they're going to need to tap into that property wealth.
Interesting. Okay. Michael, how about for you? What are some of the big trends that you've been seeing, and how are you feeling about the market as a whole?
I think as a club perspective that deals with brokers through a peripheral of different products, the later life market for us is something that we've identified probably the end of last year when I was having a conversation with Darren about the later life market as being a big growth part of our business. Look, if the regulator centralizes any pieces around a particular product, it means there's something there. They're seeing it. They're understanding that there is something that we can do more on. To add to Sanjay's side of it, we've got a different category of parents that have maybe aren't as cash rich as maybe their parents were. They're now property rich. So there's got to be a way of helping grandsons, granddaughters, daughters, sons to get onto that property market. The bank of mum and dad is here to stay, and it will be here for a long, long time. And I think what we're seeing a lot of through our whole portfolio of products is a lot of the children and grandchildren are going and talking to mum, dad, nan, granddad and saying, look, I need help to get on the market. I want to do an 85% mortgage or an 80% mortgage rather than a 95%. Can you help me? And we're seeing a lot of, not necessarily extra release on that, but a lot more RIO mortgages that are coming into that transition. My parents are the same. They helped my younger sister get onto the market by doing a RIO mortgage. So I think I'll go back to what I said previously. I think everyone said the same thing. If the FCA are looking at a particular product, there's something there for us all to support and get on board with. And we believe slow and steady wins the race. I think Darren quoted that. But I think 2026, you're going to see a big, big rise in what this market actually looks like, and a lot more innovation, which is what I think we all need.
Absolutely. And that bank of mum and dad that you mentioned, I mean, we've all heard that phrase in such regularity over the past few years. So I think it's definitely going to be a theme that'll continue into 2026. But when we talk about 2026 and looking ahead, I'm curious to hear from everybody about biggest kind of opportunities for brokers who are watching today in this space, and maybe where the main challenges lie as well. So Sanjay, can we start with you on that one?
Yeah, definitely. I mean, we've kind of had an undertone current of and a cohort of customers where typically badgered this sort of interest-only ticking time bomb. Those in the 90s that took out the plan when, a BOE rate was sort of double digits, and they now need a solution. But I think that's sort of tapering out over the next 7 years. I think we've still got probably circa anything between 60 to 80,000 customers, and the majority of them will have a solution, but some will need one, right? And just to echo what Michael was saying, it's not later life is not just equity release. There are so many solutions out there like RIOs. They're becoming more and more popular in recent times. So whilst that cohort still continues, I would echo the first-time buyers. There's still a challenge there to get them onto the property ladder. Yes, we're seeing more innovation. Yes, we're seeing up to 95% or even to 100% LTVs to a degree. But speaking to parents or grandparents, in fact, one of the lenders did quote the Bank of Family as they're broadening it out. If it was a lender in its own right, it would be in the top 10 in the UK. So that's how much growth is in that, how much support, should I say, that gifting element is providing potentially first-time buyers. I see another cohort of customers when I'm probably going to go off tangent a bit here, but it's in relation to unused pension pots, which I think the government announced in their last budget is going to come into force in April 2027. Now, this is probably now tapping into another type of financial services space, which will now look at mortgages in the later life space to support customers here, potentially on the IHT basis. So that's one that's slowly growing. There's little murmurs and rumbles about, what is this solution about? How can this help my wealth customer? But I see that as the next explosion to support the later life space. Challenges in our world, one of the biggest ones that we constantly are scratching our heads with right now is, how do we source these solutions? We've kind of got classic resi mortgages on the left hand side, and on the other end of the spectrum you've got your lifetime mortgages, but in the middle, like the families of the world, we've got this amazing innovation that supports this later life demographic. But how are we going to get all of these solutions out there in front of an advisor so that they can discount or quantify exactly what solution matches that customer scenario? So I'm scratching my head on that every day. So if anyone's got a magic silver bullet there to tell us that today, please reach out. I'd love to hear from you.
Great stuff. Well, we'll talk about some of those product types in a few minutes. But Michael, curious to hear your thoughts on opportunities for brokers and some of the challenges that they're facing in later life.
Before I add to Sanjay's point about a silver bullet, if you do find one, let me know. We're a business that dives into supporting brokers, and even we, as a group that we are, is that grey area between the two. Where does it look like and where does it stand? And we talk to build sites like family, regularly about what more we can do and how we can help brokers. So we're working on it, Sanjay. I'm sure we'll find something somewhere. But at the moment, I think it comes down to knowledge and talking to the right people at the right time in that industry. There is experts on this forum right now that could probably help out and support on that element. So I think silver bullet, not yet, hopefully soon. In regards to where do we see the growth and what is that like? Again, the later life market is massive for us. And what I try to, when I sit in front of brokers and I talk on panels and I talk wherever it is, I say, look at it. You're almost getting two transactions. If you can help mum and dad, nan and granddad get daughter and son on the market, you've got two transactions. You've got your later life lending, point one, and then you're gonna pick up that first time buyer purchase. And there is 100% mortgages out there, and they fit a purpose, and they are brilliant products, but not everybody wants them. Like, people do want to still sit in this 85% brackets. People are still scared about house prices and the rest, and we appreciate and we get it. So I think the growth market is to look at it in twofold. You can talk to a mum and dad about later life lending and help them, and then move it into a first time buyer purchase. You're getting two transactions, you're talking to two different people, then the referrals will come naturally. I also believe that our market sometimes does look at age and go, right, we're going to struggle if you're at a certain age. It's just not true anymore. Whether it's young or old, there is something out there. We're in a buoyant market that is looking to innovate across all sectors, more so in the later life market. And always to say with anyone is, don't worry about the black and white too much. The grey is where you're going to really bring the impact for your clients. So I know we're on a later life market conversation, but I generally do believe that there is a buoyant market already here. I know we're saying slow and steady, but we're seeing big raises in it. I think it's going to get bigger and bigger and bigger, and it's going to help brokers. Every broker I talk to says, I just need reasons to talk to my clients, to stay in touch. This is a reason to talk to your clients and stay in touch. Are you trying to get your brother, sons, mums, whatever it is, are you trying to go to market? We can help with different aspects.
Okay, great stuff. So Darren, any silver bullets from your side when it comes to opportunities, challenges in the market?
I think silver bullets, no. Challenges and opportunity, yes. I mean, there's so much to go on with what Sanjay and Mike have said. I mean, I'll wholeheartedly back up Sanjay's point about it's the education, is the opportunity in the sector, and it's also the challenge in the sector. And bringing equity release, lifetime mortgages together alongside RIOs, interest only, just standard later life mortgages, bringing that all together. That is a challenge of the education. So we've not got brokers working in silos. So whilst we've got that is a challenge. That's a challenge that we need to break down by being out educating brokers in the market. Obviously things like this, and you know, as I said, I touched upon earlier on the clubs and the networks that are out there as well, having those conversations. So that there is a challenge, but the opportunity, it's a growing demographic. There's 21 million over 55s in the UK currently. That's set to rise to 24 million by 2030. It's growing, and again, to touch on what Mike said there, people want to live their lives differently. Just because they're in their 50s, 60s, 70s, they want to live their lives differently to their parents, certainly to their grandparents. So they want to spend their housing wealth. They want to have different options. They want to benefit their retirement, and they want to help other family members as well. So the opportunity is massive. The challenge, as I see it, is the education and just bringing the sector more into focus into the mainstream, and not having advisors saying, well, I only do equity release, I only do standard mortgages, and let's bring that all together.
All right, very interesting. Louise, I'm going to move on to you next, just about some of those, I guess, challenges facing brokers, and then also the opportunities that they're seeing too. What are your own thoughts?
Yeah, so as a hybrid advisor, I deal with traditional mortgages and lifetime mortgages as well. So for me, there's so many opportunities, to speak to clients and, give that well-rounded advice on all of the options. I have a bit of a weird obsession with remembering criteria. So for me, these new products that are in the market for the lifetime mortgages, I think are great and I understand them. I do feel like there could be more education around those products and exactly how they work in terms of, if somebody wants to move and downsize. I've had conversations with clients where, you can make payments on lifetime mortgages, not make payments. There's so many intricacies in the products themselves and the features. There does need to be, more education around those sort of particular products. But the opportunities are massive. And I think one of the biggest opportunities is collaboration as well. So advisors that don't deal with lifetime mortgages, if you don't want to do that, you shouldn't have to do that, but you do need to work, closely with an advisor that does do that. And if you only deal with lifetime, work with an advisor that, feels like, can help you and, you can just work really closely together. That's how I got into doing lifetime mortgages, by working with, a lifetime mortgage advisor. We work really closely, not just advisors, accountants, solicitors, anyone in the industry. There's so much room for that collaboration and to work together. Pensions advisors, tax advisors. I think it's really important to do that.
Absolutely. Louise, are there any other kind of innovative product types that you're encouraging brokers to focus on, or do you think that those are the main ones that they're overlooking?
In terms of traditional mortgages, I have clients who come to me that feel like they don't have options, that, they come to me and other advisors have told them that they don't have options. I've recently, sent out a success story actually from Family Building Society, where a client, I have gone to them, it doesn't fit, their standard affordability, but I've managed to get as an exception the case agreed because they've looked at it, as a human case, that like they've looked at it properly, and they've said, this client's already affording this. This is, why would we kind of not accept that? So we've managed to justify the affordability in other ways, and it saves the client £350 a month. They didn't think they had options. They thought they were going to have to move next year and downsize, and they're not ready to do that. And they're in their early 70s, more active than they thought they would be. So I think on the traditional side of things, yes, advisors need to get closer to their BDMs. If it doesn't fit on the calculator, pick up the phone, speak to your BDM. And on the lifetime mortgage side of things, it's all about affordability. Like, you need to be having those conversations with clients about affordability and whether they can make payments, because even a £50 a month payment on compound interest can, help that client to sort of protect the equity that, most likely they want to do.
Yeah, for sure. And that can definitely make a big difference. Michael, how about any kind of innovative product types that you've been noticing or kind of encouraging brokers to focus on that they might not be at the moment?
Just to add a couple of things to Louise, because she is spot on. I deal with, and I've spoken to Dan about this many a times, and there was another event the other week talking about this. BDMs are a pivotal point and a pivotal contact within the industry, and I get a little bit frustrated when I talk to BDMs who go, I've tried to call a few firms and they don't call me back. But a broker will want that BDM to call them back when there's an issue, or they want to have a conversation like Louise is talking about. So a little plug for me is call your BDM back. Even if it's a 2-minute conversation call. I know everyone's busy. We're in a market that's busy, but call them back, because you're going to want them to have a conversation that sits outside of the black and white into the grey to see if you can help that customer save the £350, as Louise mentioned. I think the other side, to push on what Louise is saying, from a broker perspective, she is 100% right. If you don't want to be involved in this market, don't say no to the client. I call it the client bubble. Keep the client within your own bubble. So get involved with a firm that you trust to talk to your client about that one particular product, because you either don't want to or don't feel you have the expertise. Don't just say, I can't help, because we're in a world that everything is internet driven, and they will go and find someone to help. And go back to the previous point I made, you will probably lose the first time buyer mortgage because you couldn't help mum and dad release the income. In regards to product innovation, we're seeing there's so much to talk about. We're seeing loads coming out from family and from other lenders where we as a packager and a club are almost overawed by the amount of conversations we're having with new lenders coming into the industry. More importantly, the lenders that currently sit on our panel going, what can we do? This is the most interactive we've been as a club. And it'll probably be the same with Corico and MAB as well, where lenders have gone, you tell us what your brokers and clients are looking for. And I could sit here for hours talking about innovation, but I think if I'm going to focus on one, I'm going to stick to the fact that innovation is everywhere. AI is coming. I know no one likes to talk about AI. It seems to dominate everything. It is coming. I don't think it's coming for everybody's jobs. I'm honest. I think it's coming to take jobs from people that don't embrace AI. But some of the AI innovation that we're looking as a club, as a packager, I would look at it because it is coming product driven. And we are talking to some of the big banks out there about these product sides, and the same to family and the rest of it. Product wise, it's got to be RIOs. RIOs are the ones that we are seeing lenders taking a completely different stance to, because they don't want to move it into later life yet, as in equity lease. They want to sit in that RIO market where clients still feel it's less traditional, but not as untraditional as an equity release. And that's where we stand as a club.
Interesting. Okay. Darren, I'm going to let you come in.
On the BDM point, two things. Me and Mike have definitely, we've been talking about this for as long as we've known one another. And for me, it's use them or lose them. You speak with a BDM, they will probably surprise you with some of the options that are available, things that you maybe not have thought about as a broker. As I say, that goes back to the education. I think as well as a whole of market broker, the holistic advice is crucial to adhering to consumer duty. And even if you are not in, Louise's position where she is fully immersed in both sides of the later life, if we're going to call it a side, equity release or standard mortgages, is at least to be able to signpost your customer to the right point where they can get the correct advice. As I say, ideally it'd be great to encapsulate that and get everybody together as one. So because the customers are not going to be aware of which advice or which path to take. They're going to be relying heavily on their broker. For me, RIO mortgages haven't hit the spot. RIO mortgages have been out since 2018. FCA launched that. At that point, there's a lot of things that are wrong with it. For me, if there could be an overhaul of that and look into that product, we offer RIO mortgages, but very, very rarely do we get them to go through. Instead, they will move on to just a standard interest only mortgage. We will end up to age. Well, your applicant could be age 89 on an interest-only mortgage, and we can give them terms that take them into their 90s. So we tend to find that fits. But with a RIO, there's too many different difficulties, particularly around the death stress, which makes it difficult for these cases to be placed. So for me, innovation around RIO, obviously that will be a regulator conversation to have. But as far as we're concerned, we're just constantly looking to adapt. We've adapted our affordability stress test models in line with many other lenders, and we've modified how we look at interest only as well. So we're looking to extend the terms that we have extended the terms that we can do for interest only. So we're not stressing them on a repayment basis. We are doing them as a pure interest only as well. And we've long been in the sphere with pension pots that we can look at unused pension pots, and we're very adept at being able to take a 90% valuation of a pension pot and divide the mortgage term into it, which can boost affordability as well. So we're looking at ways, but that then goes back to talking to the BDM, because the BDM has all that knowledge and are able to get those points across and hopefully give the brokers those options.
Yeah, for sure. The importance of BDMs really shining through here. But Sanjay, I want to ask you as well, in terms of any kind of product types that you're recommending brokers focus on.
Yeah, sure. Thanks, Virgil. So just really echoing what Michael, Darren and Louise both all been saying there, as opposed to looking at sort of product innovation, which we know is happening and has already happened quite significantly this year already, we're kind of looking at customers and the solutions that support them throughout their journey. particularly when it comes to later life. So, arguably you've got your customers coming into their 50s that, where you'll be looking at your sort of more traditional type of mortgage, and then taking them on a strategy as opposed to just looking at products along, but taking them along the way with you. We talked about client retention. If you're not giving them a solution, someone else is going to give it to them. 100% they are. So it's either signposting or ensuring that you're being able to support that customer. But we kind of, what we're particularly doing here is saying to our advisors, be holistic, take that later life customer. Don't like the word later life for that, but that's for another day. But let's take this customer of, say, 50, start them on a traditional mortgage because arguably they're still working and they've still got that income. And then as that income sort of weaning down, where they start slowing down their work, but they still want to maintain that lifestyle, let's look at the other options out there, your interest onlys, then your RIOs, and then your equity release, your lifetime mortgage plan. The innovation's coming through thick and fast. I know I keep repeating that. I know there's more to come. I think if I'm focusing a bit more on the lifetime mortgage space, they really need to refocus on what their funding assets are to support that. But in a traditional space, we can't wait to see what's coming out. We know there are a lot of people in the pipes working on stuff behind the scenes. So, yeah, bring it on.
Bring it on. Great stuff. One thing that's interesting that a few of you have touched on is first-time buyers and how later life can be a solution to help them get on the property ladder. Darren, maybe take us through that a little bit more.
Yeah, well, we know that first-time buyers, certainly for a couple of years now, have struggled with cost of living crisis and affordability issues with passing affordability calculators with lenders, and it's been very, very tough. The calculators and the models have been difficult to get beyond, and with higher than we've been used to interest rates as well. So that's made it very, very difficult for first-time buyers to actually get into the market. So what we do and what we're finding more and more of is joint borrower sole proprietor, whereby we can have an applicant or a couple, and they can bring on their parents, even grandparents, brothers, sisters, aunties, uncle, the wider family, and bring them onto the mortgage to bring their affordability to the mortgage application. What it means is that first-time buyer will still own the property, and obviously they're named on the property. It just means that the supporter, i.e. that family member, are going on the mortgage just to support through affordability. They've got no ownership of that property. And that's a great way for first-time buyers to get themselves on the ladder. And typically, which we do sort of day in, day out, is going back to, I think, where we kick this off from, is that people want to live their lives differently. They are sitting on equity in properties. I think I read a stat the other day. What was it we're looking at? There's £2 trillion worth of equity by the over 65s in the UK. Now, they're going to want to tap into that in one way or the other. And a lot of ways that people are tapping into that is to raise equity and gift that money away to children and grandchildren, other family members, to assist them as well. So really that is bread and butter type of business for us, but certainly two ways that the older generation can assist the first-time buyers.
Yeah, that massive equity that you mentioned in over 65 is going to be such an interesting trend looking ahead. Louise, how about for you? For first-time buyers, how is later life a solution to help them get into that home?
Actually, one thing for me, I've actually got quite a few first-time buyers who are later life themselves. So, they already fall into that category. So again, the sort of longer term solutions that we have for clients, some lenders, or some of the interest only options. So yeah, that's sort of one thing that at least that like Sanjay said, you don't want to say later life. People nearing retirement, they can still get onto the property ladder as first time buyers, which I think is something for them to, or people that maybe are in their 40s, not all is lost. You can still buy a house if that's what you really want. Yeah, and echoing what Darren said really as well, joint borrower sole proprietor, there are quite a few lenders now that do that. Some lenders even will allow 4 applicants. You can even have 2 parents, brothers and sisters as well. So yeah, there are many options there. And deposits are releasing the deposit money from from the properties as well.
Important point that you mentioned as well. We have it in our heads that, first time buyers are early 20s, late 20s, whatever. Changing times, that's not always the case anymore. So definitely important to keep that in mind. Michael, how about for you? What are your thoughts on first time buyers and their opportunities at the moment?
Just to reiterate again what Darren and Louise are saying, and Ferg, what you mentioned, I've read somewhere that the average first time buyer age has gone. I bought my house at 21. I was lucky enough at the time to buy 100% mortgage with RBS. It was very easy back then at that aspect to get back on the market. Now it's a lot harder and it's a lot more difficult. And I think looking at the average age, I think I read somewhere London and the southeast is 42 is the average age of a first time buyer. So you're already, if you go 30-year term, you're already in the later life. I know we're not trying to not use that terminology, but we're already in that space. And most clients want a longer term when they first buy the house because they're trying to bring their affordability down. So you might have someone that's already in later life, but when you come around to that 5-year remortgage, they're not, because they're going to bring the term down. We're also seeing, and we're doing a lot of education in schools about, because I have a big bugbear that we don't educate our youth as they leave school. We're seeing children stay in education for longer. So they're going to university, they're staying on, they're going to get an extra master's degree and they're staying longer and longer. Then they're building their career up, right? They're at 24, 25, they leave university. They're spending 10 years building a career to be at the age where they then feel comfortable to go buy a property at the time. We're also seeing people that maybe haven't gone to university and are now doing university degrees at 35, 36. My wife's a prime example. She's currently trained to be an accountant. I won't give away her age, but she is in that bracket where she will then go on and become hopefully an accountant in her own right. But she is doing open university courses in her own time. So we're seeing difference in mantras about the youth and the middle age of the country. So I think we have to I know we use the first time buyer mantra all the time, but I kind of think we have to come away from a first time buyer ethos. And it's just, you want to buy a house? Great. What does your circumstance look like? Don't worry if you've never bought a house before. We're going to help you buy your house. It doesn't matter if you're first, your second, your third, your fourth, your fifth. Just let's help these people get on the market, on the property ladder. I also, and I don't know if this exists, but I'd love to see a product that fruitions both. So almost a product that helps mum and dad release the money and helps son and daughter get on the market as it works together. So it's two products, two lending from the lender, but you're talking to the same lender about, right, we're going to underwrite this as mum and dad, bringing the money out to then give to son or daughter, and then working cohorts alongside each other to maybe speed it. I don't know if that exists in the market. Sanjay or Louise will probably tell me if it does, and Darren will probably tell me it can never happen. Right, but the point is, this is about innovation, and this is the conversation that we're having with the lenders. So I think, how does it help? It's a massive support mechanism. I think Sanjay, I think you mentioned that the bank of mum and dad would be top 10. I think I heard there was 7th from what I heard, and this comes from the later life lending market.
Sanjay, let me bring you in.
Yeah, I didn't want to quote. I did think 7, Michael, by the way, as well, but I didn't want to go that far. And it was another lender myself there as well that I heard that quote from too. I mean, just hearing what the rest of the panelists have been saying, Fergal, let me just bring it back to something Darren mentioned earlier. It's education, and I don't just think it's education for the advisors, because let's face it, right? Our advisors, we're so caught up in what we're doing day to day. Like if we are looking at that cohort of, say, your first time buyers, or as Michael rightly called out, you want to purchase a house or a property more so, that's what you're used to it, and that's kind of where your comfort zone is. But we talked about the Asian demographics. The end consumer there's a lot of lack of certainty around the fact that if they are still working, albeit on nominal income, or they've got different income streams, there's some solutions out there where they will allow taking into consideration some of the investments, some of the pension part, some of the private pension, the defined benefit pension part. That demographic now, sadly, is moving out of the way. But education is absolutely key. And I'm looking at that not just from an end consumer perspective, but from the advisor base as well. Something we are here most certainly working with and looking at programs to deliver out in the early 2026 with the support of the likes of family and other lenders. So we're going to be banging that drum, ensuring everyone's aware of as many solutions that are out there. And in turn, let's hope that bleeds out to the consumer too.
Okay, great stuff. Well, look, just before we move on to talk about buy-to-let, which I know is going to be a really important part of the market in the next few years, I just want you to all kind of sum up your views on the future of later life lending, what the market looks like, and maybe some of the main trends that you're keeping an eye on both this year and next. Sanjay, we'll stick with you just to start.
Yeah, so I'm really looking forward to 2026. There's something we're already on the roadmap for it now. We certainly here at MAB see later life as a big opportunity. We talked about aging demographics, and we're talking about innovation solutions to support them. So what I would say is look at customers that are wanting to purchase. There is still a load of customers there that need a vehicle, and we can help them with options that are out there. Look at those that are coming up to end of their terms, more into the later life demographic and that age bracket of 50 plus, and let's look at supporting on the gifting element. It's going to be an exciting year next year, and I'm looking forward to it.
Michael, an exciting year. Is that what you're looking forward to as well?
100%. I'm just happy this year we'll be able to say it's been a good year. We've had no massive dramas, which is what I've been looking for a long time. I think yeah, I've maybe gone a bit early with that, with the autumn budget coming up. In 2026, I agree what Sanjay's saying. We as a group, we acknowledge the fact that later life lending was a big driver for us as a business, and we just see it getting bigger and bigger in 2026. The panel has spoken elegantly about how big the industry is going to be and how we're going to drive the industry. But again, we go right back to the point. Unless we educate the final consumer, us sitting in this call isn't really going to help. The education has to go to the broker into the final consumer. We're excited about 2026. A big part of the growth mechanisms that I put in place as a group is later life lending in retirement, equity release. And what more can we do to educate the brokers that currently sit under our club? But more importantly, the brokers that sit outside of a club that maybe need support mechanisms. A lot of the big firms do it really well for their brokers. We need to do it well as a club. This is a selfish thing to a degree for the smaller firms that don't have the backing of some of these big organizations that we talk to regularly. That's what we're all about. We're going to educate these smaller firms to ensure that actually, and medium-sized and bigger firms, they don't have the backing of the networks that sat behind them. So 2026 for us is going to be extremely exciting. A lot of that is driven on different mechanisms, but more importantly, later life, equity release, lending retirement. Because again, I'll go back to what I said very early on. You want to look at how you can do more transactions, help mum and dad, nan and granddad release money from their properties that they sat on to help children, grandchildren get on that market.
All right, brilliant. Darren, are you looking forward to 2026 with optimism when it comes to later life lending?
Yeah, I do. I feel that there's more messaging about the sector. As I mentioned earlier, the FCA consultation paper certainly lends itself towards that. There's going to be more focus given to it, so that gives me cause for optimism that there's going to be more known and more made aware of the later life market. Obviously, there's more things like this, as I said earlier on, the clubs and mortgage clubs and networks. In my space there as a packager as well, and also as a mortgage club, getting out there and talking about it. We've already touched upon, it's a growing market. It's a need. There's a big need in that market. I can only see it going in one way, and I've just been desperately trying to think of a new title for the market, just to please Sanjay. I just think you're more experienced of life market or something that will do. But for me, yes, it's going in the right direction. I would like it to go at a faster pace. That's all.
Got it. Well, I'll try to brainstorm ideas and get back to each other on that one. Louise, going to give you the last word on later life, what you think the future of the market looks like, and maybe some of the main trends that you're keeping an eye on.
So for me, my mission is to spread awareness to clients and consumers. So, if I could stand on the rooftops and, shout out to everybody and tell everybody that they think that they have more options than what they think they do, or they do have more options than what they think they do, then, you know, that's my mission for next year. And I think that the market will grow if clients actually understand the options that they have. I don't want anyone calling me and saying that they didn't think that they had options, because I want everyone to know that, you know, there are options out there for pretty much everybody. That's kind of my mission next year.
So we're going to pivot a little bit now and talk about the buy-to-let space, which I know there's a kind of an interesting connection between later life and buy-to-let, which Sanjay has been talking about. Sanjay, maybe just tell us what that connection is.
Yeah, thanks. No, buy-to-lets in the later life space is growing significantly. I mean, one of the statistics I've seen from UK Finance is just under 25%. In fact, so 22.54% of all buy-to-let loans in Q2 of 2025 were released to customers that are deemed as later life, i.e. aged over 55. So again, just another area that's growing significantly.
Okay, that's really interesting. And Michael, maybe just when we're talking about the buy-to-let space in general, I'm wondering if you could first of all describe what you view as the current state of the market and any kind of trends you've been noticing.
I've been trying to think of a word to describe the current buy-to-let market, and I'm not sure I can find one. I was going to use the word fragmented, because you've got professional landlords that are still buying en masse. But then you've got what we'd like to use. Again, our industry loves a pun or a terminology, which does frustrate me from time to time. We've got the dinner table landlords that have maybe inherited a property or decided they're not going to sell the current property, are going to put up to buy to move to the next stage. So when I say the word fragmented, I mean it in a good way. The market is buoyant, and I've seen in a lot of publications that buy-to-let is dead, buy-to-let is on its knees. It's going through a transition. We don't use the word transition very often, but it is going through a transition as an industry. We are seeing so much more in HMOs, so much more in student lets, lots more people going to university. The need of student lets is massive. We deal with a big landlord in my local area in Peterborough, and I sit in and I speak to him meet up him once a month, speak to him once a week. He is constantly bringing new landlords or new properties to his landlords, because there is a market there. Again, at the risk of being quoted, I think 12 people are currently looking for one rented property at a time. So you can really push that back to the fact that we have a housing stock problem, and we know we do as a country. But I do believe the market is buoyant. And when I use the word fragmented, I mean it's such a difference. You've got people not really looking at one or two properties. They're going straight into buying multiple properties very, very quickly. And they're trying to move houses into HMOs because the yields are bigger. Student lets, the yields are bigger. But what I will also say, and I was talking to someone about this the other week, a friend of mine's got a big portfolio. I've never got into buying property, although I've been in the property market for years. I've never got into buying it for whatever reason. And he is saying that, yes, he has a few HMOs, but he actually likes the family buy-to-lets. They look after his properties. They're in there for years. He's not moved his rent very much, just stayed in cordon with his own profit margin that he wants to keep. So he's not pushed it with the market as the market has done. So I think there is an element where family lets are a good thing, because families will look after it. They're just decorating, they're looking after the house. HMOs is the biggest fundamental increase we have seen in inquiries coming into our help desk from brokers that are talking to landlords that have got properties they're looking to turn into HMO. So we're getting bridging finance out of it. As we flip it, we turn to HMO, and then we're getting the exit from that. So I use the word fragmented really, really openly, but it is buoyant, and we are writing more than we have seen as a club and a packager in the buy-to-let space than we've ever seen.
Interesting. Okay, Louise, buoyant market. Would you share those views when it comes to buy-to-let?
Yeah, so I actually consulted with Jennifer Nercier at Corico, who does far more buy-to-let applications than I do. You know, I deal with sort of, again, typically the later life buy-to-let, going on from sort of what Sanjay said. You know, there certainly are, I'm seeing a lot of sort of buy-to-let clients in the later life space. But yeah, Jennifer, she, sort of, we agreed that, some people are selling, but there doesn't really seem to be like the big exodus that everyone perhaps thought there would be sort of, this year so far. So.
Okay, that's good to hear. Darren, how about for you?
Yeah, well, just having a daughter finish uni. So just following up on what Mike's point was there, there is a need for them, and it's an expense I'm pleased I'm not having to find. Anyway, that's on a personal matter. But I think what Mike says here, fragmented. I'd use a phrase of it's a mixed picture. I'd certainly go down the line that I think the accidental landlord or the landlord that's got one or two properties have exited the market or are certainly thinking about exiting the market. There's been a lot of regulatory changes and tax changes, and there's a lot more red tape that individual landlords are having to wade through. And the reduction in the profits in terms of what tax they can claim back, etc., or offset against their profits. So what that's led to is giving a greater opportunity for the portfolio landlords. So they're either going in there, they can buy those properties that are probably going back to the market. They're probably more geared up to be able to deal with the regulatory changes as well. And they see it more as a business, and they're in it for the long term. So I have seen that, but again, the figures I've got here, there's some figures that I looked at today that new lending in buy to let in Q1 of this year was at 10.5 billion, and that's up 46% at the same quarter last year. So yeah, buoyancy is definitely there, but I think it's changing makeup of how the sector is being put together. I think a lot more people are moving into the limited company space as well. And with that, there are more lenders that operate in that space, giving landlords greater option in terms of product as well. See, the final things I'd say on a positive front to all this is that buy-to-let rates are at the lowest in September, were the lowest they've been for 3 years. So again, positive news for the sector and the landlord. The concern definitely is the upcoming renters' rights bill and how that is going to be implemented. We believe that's going to be the early to mid part of next year. So that's going to take some time to bed in and work its way through. And I think, and we've alluded it to in the earlier conversation, is what's going to come out in the budget in November. There's a lot of stuff that's been floated and kited out there to see how it lands. I don't think any of it's landed well, but certainly they're putting it out there as feelers. And we're going to have to see exactly what comes of that at the end of November.
Yeah, I think everyone has their eyes on the renters' rights bill, as you mentioned, and obviously the budget everybody's talking about. Michael, I mean, we know that it's been an eventful year for landlords, but I'm wondering if you have any insights into, how they're viewing the market, in all that kind of chaos.
I would go two words I'd use: optimistic, but also concerned if you can have the same two words within the same sentence, because it kind of contradicts itself. Optimistic, because if you look at what Darren's just said, I've seen headlines everywhere where I've seen stagnation. I've seen the buy-to-let market's gone back. If anyone is in business and you end a quarter 46% up and someone in my group told me we had stagnated, I'd be asking a serious question. You can't stagnate at 46% up. So that's where the optimism is, right? Landlords are looking at the lowest rates they've seen, as Darren mentioned. They're looking at the ability to buy houses and almost swallow up the accidental landlords very quickly. Because as Darren said, and I didn't mention it, Darren is 100% spot on. These are now businesses. These landlords, it's their job to go and source property where they can buy cheap and rent out at big yields. Up north tends to be the way most are going for obvious reasons. Down south is a bit more of a kicker if you can get the properties that are cheap. So optimistic in that point, cautious with the renters' right bill, EPC ratings. A lot of our stock currently sits on, I think I saw something E or D, so it's going to be a big ask for landlords to get those old Victorian houses near where I live up to a C, let alone anything above. So I think there is optimism in the market because rates are down, the market is up. Word of caution on the market being up to a degree. We know things are coming next year, so people will buy quickly to get ready for when these differences and the change in regulation comes in from a government perspective. So optimistic but cautious at the same breath is how I would say the landlords that we talk to saying, but what I will always say about anything, in the UK, we will buy houses. We'll always buy houses. Irrelevant what's happening around us. We are, as someone mentioned, we're an island. We are an island, and we will forever continue to buy property and sell property. And that's where the optimism. I'm an optimistic person. For those that know me, I'm very half full rather than half empty. And as long as we have properties to sell and buy, our market will grow and continue to grow. It depends on how quick it grows. Is always the answer.
Absolutely. No, it's a good attitude to have. Louise, any thoughts yourself on the landlord front and how they're doing the market?
I think it's important to focus as well, on new landlords. And I think they don't know any different. So they only know, what is how things are set up now. And I think that's really important to, to sort of look at as well. So affordability obviously is much better at the moment. Obviously, healthier rates. There's some of the landlords that have been selling off. There is a bit of an oversupply at the moment of sort of one-bedroom flats. So I think there's going to be a lot of opportunity for new landlords to pick up perhaps some sort of low-value properties. And I think that's important. Sort of, yes, generally people are waiting to see what the renters' right bill is. But yeah, I think there's a lot of opportunity for new landlords who don't know any different.
How about when it comes to brokers? Any thoughts on what they should be focusing on, Louise, or any kind of opportunities that they have?
I think brokers should just, again, focus on the positives, make sure that they, understand what the renters bill is and, what that means for clients, make sure they understand, when to refer to, should always refer to a tax advisor to make sure that, they are setting it up correctly and it's, is it a limited company? Is it personal? How are they setting that up? But yeah, just again, look to the positives. There might be some cheaper property come to the market. And, is there ever a good time to buy and to do this? The earlier that you perhaps invest in property and you do that, the longer that you have to make sure that investment, obviously makes good. So it's just understanding what that person wants that property for. If it's, capital appreciation or they want an income in a future, they just need to understand their client and what they actually want out of it so that they structure the investment properly.
Absolutely. Darren, how about for you? Anything that you're advising brokers to focus on when it comes to buy-to-let?
No, well, obviously, as Louise says, get the correct tax advice. We're seeing that landlords are diversifying their portfolio, moving into HMOs. It might touched upon that. We're seeing that landlords in that space are not necessarily that it's not less necessarily the student HMOs. They're professional people, professional tenants, people that want and need to be living near the cities. Maybe of a certain age and they want to be closer to the cities, but just haven't got the incomes to be able to afford the properties. So these HMOs, as we're seeing, and the brokers we're talking to, they are of a better standard. Tenants are demanding that as well. So I think that's an opportunity for the market, and we're seeing more and more landlords going down that route and exuding a more of a professional about themselves. I think the overriding, without fear of repeating myself, the overriding fear is these two big things, and it cannot be emphasised enough. And it's almost it's a cloud that's sitting over the market at this moment in time. And I don't want to talk the market down, but it's very, very real. It's the renters' rights bill, and certainly this upcoming budget. It is there in brokers' minds, and we'll just have to see how that plays out.
How about for you, Michael? Any kind of message that you have for brokers?
I think the message I would always say, and Darren's right, the renters' right bill is looming, the autumn budget is looming, but I do think we worry too much about things that haven't happened yet as an industry. I honestly think we look at things that could happen, might happen, will it happen? We don't know, right? The government have cited little things and big things they're going to bring out. Will they do it? Who knows? They don't even know half the time what they're going to bring out, right? This is the point. So we sit and we try and second guess as an industry what's going to happen. Concentrate on what you're good at as a broker, which is educating your clients of exactly what looks like might happen, but more importantly, what is happening right now. Back to Darren's point about HMOs, they are a better standard. They have to be a better standard. We've had regulation coming from that side of it. What we are seeing, I didn't mention this earlier, and this is something I would urge brokers to look at. We're dealing with a lot of landlords and mortgage brokers who deal with landlords that have clients down south in London that are sitting in HMOs, not paying as much as they would if they're renting a one-bedroom flat on their own. So more disposable income while earning more money in London, buying up north and building a portfolio. We have products out now there, first-time buyer, first-time landlord, non-residential owner wanting to buy property. So we are seeing a lot of young professionals, as Darren said, quite rightly, where they are trainee doctors or nurses or dental, whatever it may be, solicitors, buying up north and building a portfolio while they're living down south, earning very good money. And what they're doing is they're building themselves a pension pot later on. That's what they're looking at. So if I was to say to any broker, what are you looking at right now? Don't shy away from the buy-to-let market because it's a little bit more difficult than it used to be. Keep talking to your clients because HMOs are big, student lets are big, and Darren is spot on by saying, and I didn't mention it, we are seeing so many professional landlords now. I live about 15-minute drive, about a 25-minute, half an hour walk, random, but you have to go a long way to get to the hospital from where I live. And we are seeing houses being turned, big 3-storied houses being turned into HMOs for nurses, doctors, and they are going very, very quickly. And the yields are high on them, especially in the Peterborough area. We're even seeing people commute from surrounding cities to live in Peterborough to do that. We're seeing people live in Peterborough commuting to London. It's the best commuter town for London. So people are living outside London, commuting in. But again, HMOs, because people spend more time out now. So I talk to a lot of my friends and family and friends that live in Peterborough, work in London. They're not getting in until 10, 11 o'clock. And they're saying to me, I just need a nice bed to go back to. I'm not bothered about eating there because, and I know it sounds silly because we're talking about hate, but it is what the customer is looking for now. So the biggest takeaway from anything to do with buy-to-let is don't say no because it feels a little bit more difficult, because it is, unfortunately. But worry about what you can do right now. And that is help these people get on the property, get into a property, get some properties around their areas and make some money from it.
Okay, great. Well, look, I'm going to ask everybody just to run things off in a second with what's in store for the market for 2025 and the years ahead. But just wanted to throw it out to the group, first of all, about anything else they wanted to add on criteria changes, how they've impacted the market, and any kind of specific product types that you're recommending to brokers.
So I think the product innovation, we are seeing a lot more HMO products. We're seeing a lot more clients that are taking bridge products into landlords that are taking bridge into buy-to-lets purely because these properties aren't at an EPC. Clients, we spoke about it very briefly. Clients want an energy efficient property. It's everywhere. It's in the news everywhere. So they want solar panels. They want electric charging points. They want energy saving light bulbs. They want all of this. So landlords have to get in tune with it. So the big portfolio landlords, the boys and girls that own big property margins are going, actually, we're going to buy the lesser properties because we get them cheaper. We'll do a bridge. It's going to cost us a bit. We'll do it in 3-6 months. And also, what we are noticing, the bigger landlords, and this is where the smaller landlords unfortunately struggle, is they've got building firms that they either work alongside or they own that come in and do the work for them. So they're getting that side of it cheaper as well. So I think if it was up to me and I was a broker looking at what product set you need to look at this bridge to let. It goes alongside the product I spoke about earlier, where can we have a product where we're doing the later life lending, the RIOs, while the same lenders also then lending the money to the son, the daughter to get them all on the market. That bridge to let product is happening one valuer looking at the product, knowing what's going to happen, and they are flying. And even the smaller animals, like Louise said, the ones that don't know any different to the market right now are using those products. And more people are living down south and buying up north. And that seems to be a big trend at the moment.
Great stuff. Louise, how about for you? Any kind of product types that you're recommending?
Yeah, so we have a fair amount of expat for in Corico, so it'd be wrong for me as Darren's here not to plug expat families expat sort of proposition. So yeah, there's other lenders as well, but people moving away from the UK at the moment, we're seeing a fair amount of that. So yeah, I think that's one of the spaces sort of certainly to keep an eye on where products I feel like are better now.
Great. And Darren, last word to you in this one.
Yeah, as Louise says, we've enhanced our product proposition for buy to let. I'll start with expat, as Louise raised that. We moved to 75% loan to value. We realised that landlords want to raise more capital from their properties, so we increased LTV earlier this year. We reduced our interest, or ICR, should we say, on limited company buy to let. So we brought that down as well, because we were finding, and as I mentioned earlier on, that interest rates were making affordability difficult. So we did that also. We launched multi-unit freehold blocks up to 75% as well, and we brought a HMO product out to the market as well. So we were able to do that on a expat basis, limited company, and as a private individual as well. So we are aware, and we know the size of the buy-to-let market. We talked a lot earlier about the later life market, but the buy-to-let market for ourselves as a business is a big part of what we do. So we're very, very keen on that, and we keep a very, very close eye on it.
Brilliant. Okay, well, look, we're nearly at the end. And first of all, I'm going to thank you all for joining us today. But before we wrap things up, I want to just get your thoughts on the buy-to-let market for the rest of this year and in the coming years. What's your outlook? And I mean, the kind of top trends that you're keeping an eye on. Darren, maybe we'll start with you.
Well, to keep Mike's theme of optimism going, which of course we want to do, I think there is a belief that inflation is remaining stubbornly high, and there may be one rate cut in the next 12 months. Now, that being said, the optimistic part to that is that with recent FCA clarity around affordability, that has improved the situation for the mortgage market in general. But I think there's been a general stabilisation of interest rates. The housing market has been proven to be resilient with stable house price growth and activity. So I think going forward into 2026, if we can march along with that optimism and that belief, then yeah, I think 2026 is going to be another year of change, as we've talked about, through regulation change and whatever else is decided between now and the end of the year. But as far as the market is concerned, and as far as we're concerned as Family Building Society, we're just looking for an upward trajectory and looking to grow the business further.
That's great. Louise, how are you looking ahead to the next few years? Optimistic, cautious?
I'm always optimistic as well. So yeah, I think, again, there's demand for new landlords. And as long as rates stay steady, affordability is there. Yeah, just people just need to do their research. Yes, we're going to hold out for the renters bill and everything, and see what happens. But the market is resilient. Property prices are resilient. So if the market is as buoyant, half as buoyant as it was, beginning of this year, then it's still going to be another good year. So.
Great stuff. I think that buoyant is the word of the meeting. So all sounds good. How about you, Michael? Any big thoughts on what you're looking forward to for the next few years?
It will come as a shock that I'm very optimistic about the market. Look, I think the market is a brilliant market to work in. Louise used the word resilient. It is resilient. We have been through a lot as an industry, and I won't get into the ins and outs of what we've been through, but if we all remember when we went through COVID and came out of COVID, I was told by multiple societies and organizations that were going to have a COVID transition of property prices dropping. Did it ever happen? No, it didn't happen. So for me, change is inevitable. We have to understand change will come, but change doesn't have to be a bad thing, does it? Right? Change can be a good thing. If we didn't change, we wouldn't have electricity. We wouldn't have what we're doing right now. We wouldn't be on a Zoom call. This would be face to face somewhere. So change is a good thing. So just embrace the change. And if it makes our jobs a little bit harder, so be it. But what that does mean is we are needed in a job. If our jobs get too easy, then you ask that question, the OAI question that comes around all the time in every meeting I'm in. So for me, 2025 is going to be big for us as a group. We are growing astronomically across all departments. 2026 for us will be the same. It'll be big. It'll be stronger. There will be changes. We'll have to adapt as a business, but we have to do that. And I think my optimistic head says we will all do well and write more business next year, even with these changes that are coming through the door. So just embrace change. And if you don't know about the change, there are so many organizations you can pick the phone up to and talk to. Big organizations, small organizations, friends, just talk to people. We don't seem to want to talk again. This has happened as an industry. We don't talk enough. We don't share enough insights. I'll talk to anyone, any of my competitors, anyone that wants to sit down and have a conversation about mortgages. Darren knows this. I will sit and talk. You'd almost have to tell me to be quiet sometimes to talk too much about mortgages. My wife does all the time. I think, look, my outlook on 2025, 2026 is forever optimistic. But remember, change is coming. Just embrace the change. Because whether you want to come or not, change happens in life.
It certainly does. Sanjay, last word to you on this, not necessarily about buy-to-let, but maybe thoughts on the market as a whole. How are you viewing things looking ahead?
Yeah, spot on, and just really just echoing what Michael said there. The opportunities are out there, and there's a plethora of them. Irrespective of your customer profile, be it in later life or if you've got, as Louise mentioned, your first-time property investors. I guess the key themes I'm taking away from here is we've got an absolute challenge here in terms of the education. We've got some amazing opportunities coming up throughout the next coming years. And the last thing, perhaps selfishly, because I was a BDM, pick that phone up, talk to your lenders. They will know little nuggets that is going to save you and your customers. So, look, we're all here to support and keep the wheels turning and the lights on. So, yep.
Great stuff. Well, look, that's a great place to leave things off today. Want to thank you all, first of all, for joining us. Great job, everyone. Really appreciate you coming on, and all the best for the rest of the year. We'll be keeping a really close eye on all the trends that you mentioned, and plenty of opportunity out there for brokers, which is great. But yeah, we'll talk to you all in the next few months, and thanks very much for joining us. So that just about does it for today's edition of MITV. Thanks to all of our panelists today. We had Darren Deacon from Family Building Society, Sanjay Gadhia from the Mortgage Advice Bureau, Louise Stevens from Corco Lifetime, and Michael Craig from Brilliant Solutions. Thanks to you for watching, and we'll see you next time.